Have you ever wondered how the stock market works? It's not as complicated as you might think. Let's start with the basics. The stock market is a public marketplace, a sort of grand bazaar where people from all walks of life can participate. But instead of buying and selling ordinary goods, people in this market are trading stocks. Now, what are stocks? They're essentially pieces of a company that you can buy. When you purchase a stock, you're buying a small share of that company, making you a part owner. Companies, especially those looking to grow and expand, often use the stock market as a platform to raise capital. They do this by selling portions of their business in the form of stocks to the public. This way they get the funds they need, and in return, you get a stake in their business. So, you see, the stock market is essentially a place where businesses meet investors. Now, you might be wondering, where do investors fit into this picture? Well, investors play a pivotal role in the stock market. They are the lifeblood that keeps this financial ecosystem thriving. When investors buy shares in a company, they're not just purchasing a piece of paper, they're actually becoming partial owners of that company. Now here's where it gets interesting. When the company they've invested in performs well, the value of their shares increases. This increase in share value translates into profits for the investor. It's like planting a seed and watching it grow. The better the company performs, the bigger the tree, and the more fruit it bears. But it's not all sunshine and rainbows. If the company underperforms or suffers a setback, the value of the shares can decrease, resulting in potential losses for the investor. So, as an investor, you're essentially betting on a company's success. But what happens when things don't go as planned? What are the risks involved? Well, investing in the stock market isn't a guaranteed path to wealth. It's a venture that comes with its fair share of risks. One of these risks is the fluctuation in a company's performance. Various factors such as market competition, economic conditions, or even a company's internal issues can cause this. When a company underperforms, the value of its stocks can drop significantly. This could lead to financial loss for investors who have shares in that company. And in extreme cases, if a company goes bankrupt, its stocks may become worthless, leading to a total loss for its investors. But remember, the stock market isn't just about risks, it's also about potential rewards. The same factors that can cause a company's stock to plummet can also cause it to soar. It's a game of uncertainty, but with the right strategy, it can be rewarding. It's important to understand that investing in the stock market has its risks, but with great risk can come great reward. So, how can you make informed decisions when investing in the stock market? Well, the secret lies in one word: research. It's not enough to rely on hearsay or follow the crowd. To succeed in this game, you need to do your homework. Consider the stock market as a vast ocean teeming with different species of fish. Some might be bigger or more colorful, but the real prize catchers are those that offer the most nutritional value. Similarly, the best stocks are not necessarily the most popular or the largest. They are those that demonstrate solid performance, promising industry trends, and strong economic indicators. Look at a company's financial statements. Are their profits on an upward trend? What about their industry? Is it growing or stagnating? And what does the overall economy look like? Is it bullish or bearish? These are the types of questions that should guide your research. Remember, knowledge is power in the stock market. The more you know, the better your decisions will be. So, what have we learned about the stock market today? We've unpacked the basic concept of the stock market, a bustling hub of economic activity where companies and investors come together. It's a marketplace where businesses raise capital to grow, and investors, big or small, get a chance to own a slice of the corporate world. We've also delved into the pivotal role of investors. They're not just passive participants, but active contributors to the market dynamics. Their decisions, driven by a myriad of factors, collectively shape the market's direction. Risks and rewards, the two inseparable elements of the stock market, were our next stop. Investing in stocks can bring substantial returns, but it's not without its hazards. Market volatility and potential losses are part and parcel of the game. And finally, we underscored the importance of research. An informed investor is a successful investor. Knowledge is power when it comes to navigating the stock market's labyrinthine complexities. Understanding the stock market is crucial for anyone interested in finance, whether you're a student, a budding investor, or just curious. It's a fascinating world, full of risks and rewards.